Adiel Gorel has helped thousands secure their retirement riches. Even the great Warren Buffett wrote him needing to know more. The answers are all here for you. Welcome to the Remote Control Retirement Riches Show.
Is rental property depreciation good or bad for investors? So first, what is depreciation? I have to say that in general, buying real estate investments in the United States is kind of nice. It's kind of almost privileged. Not only can you get 30-year fixed rate loan that never keep up with inflation, which is a miracle in itself, but when I explain some of the benefits that we get here, and I'm in another country, and I explain about depreciation. So depreciation, I tell them, actually, once I explain it, here's what they say to me. You want to tell us that on top of all the other benefits that you guys get in the US, you buy a home that will likely appreciate in value with the years, but for tax purposes, they let you pretend that it's a machine that goes down in value so you can take a loss? What kind of a country is that? Well, it's a great country. That's what it is. So this is a benefit. This is a tax benefit. Depreciation is indeed pretending that the home that you bought, which is quite likely and historically done at least 1.5 times the pace of inflation, and many times much more than that, so it goes up. You pretend that it's a machine that has a limited life cycle and will be worth zero at the end of a period. As of now, unless they changed it last night and I don't know, the depreciation on single-family homes and residential property like that, it goes in a straight line for 27 and a half years. Why 27 and a half? I suspect one of the regulators woke up one day on the wrong side of the bed, felt a little nasty and wanted to make it a little more complicated. 27 and a half, I'll show you. So, and you don't depreciate the entire home. The land component is non-depreciable because no matter how you pretend that the home is a machine that goes down in value, the land stays the land. So let me pick up an example. Let's say you bought a home for $300,000 and the value of the land is $60,000 at the lot value. So 240 is the value of the structure. It's called the improvements. So you, in this case, will depreciate the home every year for $240,000 divided by 27 and a half. And that would be the number. So it's going to be about probably, $8,000 a year or something like this. You will take it as a loss on your taxes. Now, depending on what your tax return looks like, you may enjoy those losses right there in the same year, or you will carry them forward to be used in the future. So that sounds like a pure benefit. However, it's not all there is. When you sell the property, now you have to pay taxes. So if you held it for longer than a year, of course, it's long-term capital gains. But there's also a component called Depreciation Recapture. So we gave you the depreciation, but now it's being recaptured. I'm not a CPA. I don't follow it every day. The last number that I remember, I think depreciation recapture is at 25%. However, if you're at a higher tax bracket and you use the benefit of the depreciation loss at a much higher rate, recapture it many years later in the future where the dollars are very cheap, it's very good anyway, and 25% is good. But some people never have to even do that. Let me give you an example. You have the $300,000 home. The land value is 60. The depreciation is 240,000 divided by 27 and a half in a straight line, which you take every year, every single year. Let's say you've held the home for 20 years. So you've taken the depreciation, 20 out of the 27 and a half years. Now, every time you take the depreciation, you lower the basis for the home. So the home value, including the land, is 300. First year, you took depreciation of 8,000. Let's call it 8,000. So now the basis is no longer 300. It's 300 minus 8,000, which is 292. As the years go by, you have used it for 20 years. you lower the basis by 160,000. So now the basis is 140. And let's say after 20 years, the home is now worth $1 million. I'm just making up a story. So the home is worth $1 million. Let's even say net million. You sell it, and after all of the commissions, you got $1 million. So you have to pay long-term capital gain and depreciation recapture taxes on $1 million minus the basis, which is 140,000. That's a big chunk of tax. However, one of the other benefits we have in the United States, because it's a great country, is the 1031 Tax Deferred Exchange. So let's say you say, I'm not going to actually sell it outright. I'm going to sell the property and put all the proceeds in the account of a qualified intermediary and use it to buy 10 new houses. Now, you made your estate a lot bigger. Hopefully you were smart and got 10 30-year fixed rate loans, which inflation is now going to erode. And you didn't pay a lick in tax. You didn't get forgiven. You are carrying it forward. And then, let's say, another 15 years go by. And all the 10 homes now are worth $1 million each or something, whatever. You have a lot of taxes to pay, and you choose to do another 1031 exchange. And now you have an estate of 40 houses. You are becoming very wealthy, and you still didn't pay all of that depreciation recapture. And then one day, you make a move. I don't recommend it, but for taxes, it's a good move. You die. Not my recommendation, but it's been known to happen. So the Biden administration was trying to repeal a staple of this economy. The staple is called the step-up basis. So I'm using this example on a single home. Let's say you have a home that's worth $1 million net, and your basis is $100,000. If you sold the home the day before you die, you need to pay long-term capital gains on $1 million minus the basis on $900,000, a big tax. The next day you die. The minute you die, there's a step up in basis to the value of the home on the day you died. In my example, $1 million. Your heirs now go to sell the home the day after you died. Now they need to pay tax on $1 million minus the new basis, also $1 million, zero. So you could take depreciation, enjoy the depreciation losses for many years, do a 1031 exchange if you want, and then make the ultimate tax move and die. And you never had to pay the recapture. Again, not a recommended move, but since it happens anyway, it's not a bad thing to know about. We will, of course, discuss it at our next event, which you are welcome to join for free. You can register at info@icgre.com under events. And I will be discussing, the subject of, is rental property depreciation good or bad for investors? Thanks for joining me today. Click the subscribe button for more video on real estate. Got a question or comment? I love questions and comments. Leave yours below. And here's another video you've got to see.